The American economy is currently in a state of flux as it tries to deal with the pandemic's aftermath and the high inflation rate seen in 2022. Although the U.S. government, like others around the world, is pumping new money in the form of new economic legislation, Michael Burry, who is the subject of the movie The Big Short, has outlined the reason for concern with this way of thinking. In the years leading up to the global financial crisis, Michael made his name by accurately predicting the collapse of the U.S. housing market. This crash was devastating for millions of people around the world, leading to lost jobs, foreclosed homes, and skyrocketing unemployment. Workers who kept their jobs saw their retirement and pension accounts get cut in half as the stock market fell. And so we shouldn't be ignoring Michael's latest tweets. Today's video is going to be one big financial ride, so brace yourselves and watch the video till the end. Don't forget to subscribe to our channel, and let's begin. Burry decided to delete most of his tweets, including the ones about his economic worries. He has frequently deactivated his Twitter account, sometimes following public arguments with other well-known individuals like Tesla's CEO Elon Musk last year, who called Burry a broken clock for his criticism of Musk. To begin our timeline, we must go back to Burry's tweet from the previous year. He tweeted, "People always ask me what is going on in markets. It is simple. Greatest speculative bubble of all time and all things, by 2 orders of magnitude. Given that there have been some spectacular bubbles, this is a bold claim to make. The 1929 stock market bubble, which contributed to the Great Depression, the Nifty 50 stocks of the 1970s, and the dot-com bubble of the early 2000s, which saw internet companies with little to no revenue trade for billions of dollars, and finally, the housing bubble for which he became famous. That's why we should all be curious, because Burry refers to what's happening right now as the biggest bubble of all time. For more context, it's crucial to know when Burry posted this tweet. It was posted in June 2021, a time when the markets were utterly irrational and cryptocurrency prices had skyrocketed. Bitcoin had recently increased, and altcoins also experienced even crazier price swings. Many of these cryptocurrencies were nothing more than short-term speculative investments rather than long-term fundamental ones. This speculation extended beyond cryptocurrency and entered the stock market as well. Even some very well-known and prosperous businesses saw their stock prices soar to totally irrational heights. Additionally, Burry tweeted earlier this year saying, "All hype speculation is doing is drawing in retail before the mother of all crashes. FOMO parabolas don't resolve sideways when crypto falls from trillions or meme stocks fall from tens of billions. Main Street losses will approach the size of country's history ain't changed." Michael here argues that when asset prices are in a bubble, the decline is never gradual. Just as quickly as the price increases and people start to profit, the price can decrease and money can be lost at the same speed. It's incredibly difficult to predict the state of the economy or when a bubble will burst, but it seems that Michael was right on target regarding these specific tweets from last year, based on the decline we've seen in the prices of various assets over the past year. However, Burry hasn't just declared victory. He's continued to tweet his opinions about an interesting market situation that we're currently witnessing. Imagine a theater with a seating capacity of 300, but it is overflowing with 500 people. If a fire broke out and everyone dashed for the exits at once, the results would be disastrous, as people would trample over each other in an effort to be the first out. This is very similar to how the stock market operates. Picture a highly speculative stock that saw investors pour money into it when times were good. As more investors pour money, the price rises, sending the stock price to higher highs. But when the bubble in that particular stock bursts, the opposite occurs. As the first investors begin to pull out, the price drops, which prompts more investors to follow, further lowering the price. This occurs because the majority of those who purchased the stock were motivated to do so by the success of their friends or people online. Although not everyone leaves in less than a year, and Burry is referring to this fact when he says that not everyone gets out at the same time. Recessions are said to create millionaires, but what that really means is that you can use a downturn in asset values to your advantage by purchasing stocks when they're cheap. We hope you learned something new from today's video. Please give this video a like and subscribe to our channel if you haven't already. Thanks for watching. See you in our next video.